Alan, it's always great to talk to you. It feels like a while, actually, but thanks for coming on the show.
Yeah, it's been some time. We've seen the markets move, and that's what we want. That's how money is made.
Okay. What is your outlook on oil? Crude holding above $70 US. You think that is a powerful, an optimistic signal for the economy?
Yeah, no one likes to pay more at the gas pump, obviously, but it's a healthy sign to see crude come back the way it did. And right now we're above the midpoint of the action we've seen in the big picture. We went from 110 years ago down to, I'm going to say 30. I know we technically went to 0, but that was an aberration, kind of a statistical anomaly there. But let's just say 30. So 70 is now the midpoint of that larger overall movement. We're back above that. So the fact that crude has had this climb is very much a positive. If you look at it as a barometer of economic strength, the markets, the macro market likes it. And I think it's a healthy sign. We just now have to pay more after essentially having, very, very, very inexpensive gasoline last year.
What will the effect of climbing gasoline be, though, on U.S. economic growth? I mean, will it crimp consumer confidence, for example? It is a tax on consumers.
It is somewhat, but I look at it in as more of a positive than a negative. We've seen this before, and if you remember years ago when gas prices came back down, everybody thought that would give us an economic boost, and it really didn't. So you can't have it be bad and be good at the same time. So I think I just use it as a gauge of overall economic strength. And if we want to talk about the fact that commodities have come back, they came from an extremely, extremely low level. People are, I think, losing sight of that fact. If you look at commodities in general, the CRB index, it was down at 125 at its lows in 2020. Right now, we're at 225. So yes, we've had a healthy rally, but prices were so low across the board. But commodities right now are still at half of what they were in the 2008 high. So there's still a lot more upside. But let's remember that we were at such low levels, there was really nowhere to go but up.
Yeah, I mean, that's the thing. The year-ago figures are still so distorted. What about copper? Do you see upside in copper from here, Alan?
Well, copper's come a long way as well. They used to call it Dr. Copper when I was a young trader because they would look at it as a barometer because it was so involved in housing starts. That's changed dramatically. Right now, the copper demand rise, a lot of it is because of electric vehicles. Use so much copper from a fundamental standpoint. But I think it really comes back to all of the base metal commodities. If you look at iron ore, you look at copper, aluminum, they were all at such extremely oversold, overdone levels on the downside. They've all had healthy bounces, much like crude has. And, I think there's going to be opportunity, but will be pullbacks. And I've traded a lot lately, U.S. Steel, Cleveland Cliffs, Alcoa, but you want to be buying into them after a profit-taking round to give you better risk-reward. I still think that they still have a lot more upside trends in the metal markets, and I imagine that will bring us to the next is going to be talking about gold.
Right, and okay, we've only got 90 seconds. What about gold? Are you buying gold right now?
Well, I think from a risk-reward standpoint, it had come a long ways, and you're seeing some serious profit-taking. The 1800 is an important pivot to get back above. It hit a wall at 1900, which was a halfway point of the action of the last few years, from those highs at 2100 down to 1700. So I think gold, but this all is predicated on the dollar coming back down. The dollar got firm. The markets were overly concerned about Fed rate hikes, and that's not happening anytime soon. And the yields are telling us that. The stock market's telling us that. And inflation, I think, was just a near-term concern. And I call it reflation, not inflation.
Mm-hmm. We've less than 60 seconds left. Is crypto a threat to gold? Do you think it'll, over the long term, displace a lot of the gold market?
I don't think so. I think they're just separate markets. There's more opportunities now in the markets than we've ever had in my lifetime. You can trade any market, anytime, any direction. And as long as I can get in and get out and execute my trading plan, I'm willing to trade anything, wherever the opportunity lies. Whereas when I was young, I was in the trading pits, you could only trade what you were in that particular day. So if there wasn't movement, you were hard pressed to be successful. Now I love the fact this is the best time in history to trade, and I use the words trade and invest interchangeably because a trader just has a better plan than an investor.
Okay, let's leave it there, Alan. Thank you very much indeed.